Picture this. You are raising your very first round of venture, and an investor invites you to pitch him at his house on a Saturday morning. You walk in, the investor points over to the baby monitor on the counter and says, "When the baby wakes up, your pitch is done." 20 minutes later, the baby wakes up, he looks at you, and he says, "Okay, let's do it." That investor was Gary Tan, who's now the president of Y Combinator. And the founder was Stefan Kalb, who has founded 3 companies, raised over $100 million, and is now building super labs, bringing AI to Main Street businesses. His most recent round, he didn't even have to try to raise. He got preempted for an $8 million round before he even opened conversations. What a great sign of a great fundraiser. Today, Stefan tells us exactly how he got there and why he believes that any founder can learn the same. Stefan's approach is not tactics first. It is character first. And in his view, founders who win capital, they're not just better pitchers, they've built the internal traits that make investors want to bet on them. Stefan is also now a venture investor. And what's great about this conversation is you're going to see how he nurtures those characteristics as a founder himself, and how he sees them show up in the entrepreneurs who pitch him over 400 deals per quarter. He's got a full 360-degree view, and I hope you enjoy. Stefan, I'm really glad to get to talk to you. You've founded multiple companies, you've operated them, you've been through things all the way to exit. You're now working on a new startup, Super, that I can't wait to talk about. I'm really excited to get to dig in with you.
Yeah, likewise, Ben. Listen, I'm really honored and excited to be on the show with you here and jumping into all these meaty subjects.
So it's fun to always start with some fast-paced questions. Do you have a favorite book or podcast that you feel like entrepreneurs should check out?
One book that you probably have not heard of that I really enjoy is called Reinventing Organizations. It's a dense book. It's really fascinating. I think it's, especially now, the way that we're going to see this new world, how our organizations work. I think that book is very apropos.
Wow, what's something you picked up from there?
I think the ability to make decisions really fast and make way better decisions is breaking up the construct that we have today of how these organizations are built traditionally. And so I think reinventing how organizations work and how decision making works, especially now that we are giving everybody so much more power in the organization, is, I think, this new world order.
I'm finding with AI, the companies I'm involved in are able to get enough information quickly enough that if the CEO really creates that fast driving decision-making culture, they're able to move so much faster now than before. Say, is fundraising a relationship or a transaction?
Oh man, now we're really getting into it. It's absolutely a relationship because it's a partnership. It is not a transaction. When you sell a portion of your company, it's no longer just yours. It's now a partnership with a bunch of other owners. And so it's absolutely a relationship.
What do you think is more important for a successful fundraise? Would you say it's EQ or IQ or hustle?
Ooh, that's really tough. I would say that it absolutely has to be hustle. I wish it was IQ. I wish EQ had more of an impact, but it really does come down to hustle, just like many things in life.
Speaking of hustle, when you mentor CEOs and when you think about what the fundraising climate's like, how many VCs do you think a CEO should reach out to in their first big wave of outreach?
I think realistically, it depends the relationships that you have. If you are in a place where you have a lot of deep relationships, then you don't reach out to many, right? And you really invest in the ones that you have. I think if you're in a position where you haven't really fundraised before, there's a couple things that are necessary. The first thing is you need to actually test your pitch and your concept with quite a few people and seeing how it lands. And so in that particular case, an early stage round, someone talking to 40 plus VCs. And I think that's like pretty normal for, a seed, pre-seed kind of round. I've seen some, rounds take longer where they're closer to like the 80, 100 range, but there's a lot of seed funds out there. So getting, 40 conversations is pretty attainable.
Yeah, it's amazing compared to a couple decades ago. There, you'd struggle to find 40, and now
Yeah.
up to 40 is more and more common. Next question: can you manufacture FOMO?
Man, this is a really big problem. You can totally manufacture FOMO, and I think the thing that you need to be very careful of, very confident of, is what that's going to get you. And I think there's two things to think about. First is in your current fundraise, if you manufactured FOMO, and then an investor later on feels like you've done that, you've burned a relationship, which is really important. It's important for future connections. It's important for reputation. And so, generally speaking, you have to be really careful manufacturing something that's inauthentic because that can and likely will burn you.
Yeah. For you right now, not just related to capital, but in all you're doing as CEO, what's your personal AI stack?
Ooh, that's a really good question. I'm a big Claude fan, so I use Claude enormously. I record almost every meeting that I have with Granola, even conversations I have with my wife. Sometimes I'll turn on Granola. I do like to use Notion for a lot of writing in the AI built into Notion. But honestly, I'm able to get an enormous amount done just with Claude. So I really invest pretty heavily there.
Yeah. Last fast question. Do you love fundraising or do you dread it?
What I really enjoy about fundraising is that you get to go out and talk with a bunch of different people who are really intelligent, have really good pattern matching, who give you feedback on what you're doing. And, there's no better way to get this high level feedback from a large audience who is really educated in terms of what you're doing than in kind of a fundraising scenario. I guess I just really, I'm a student of business, I'm a student of startups, I'm a student of technology, and I really enjoy this ability to have these great conversations, right? And just having that at scale with a bunch of different people with different opinions and different things they've seen in the market is just incredibly valuable. So,
Like, so I'm conducting these interviews along with a bunch of research on what the best founders do differently that gives them a capital advantage. And what you said there about that openness to wanting to have the conversations, hear the voice of the investor, that is, by the way, the 100% number one consistency across every great fundraiser is they all walk in with that, what can I learn here? And it's really interesting because I've also worked with people and seen them operate where they blame the investor for not getting it. Like your attitude is, well, I'm here to learn.
yeah, absolutely. I mean, if the investor's not getting it, then I'm probably doing a bad job of explaining it. Now, I will say this, and I think this is really important. I think that it's really important to have this. When I see a founder pitch to me, I really want to see conviction with them. I really want to see that passion. They really get it. They feel, really clear about what they're building. And I want them to be able to take really great feedback. In our portfolio, we've got a couple of unicorns now, and one of them is a company where we invested very early stage, and now they're a unicorn. And the founder, I was having this conversation with him, and he had high conviction about what he was doing, but I found him to be lacking in the realm of marketing and PR, and I was really clear about that. And he took it to heart and made a huge shift, and it's been transformational for his business. And that's exactly what I'm looking for a founder. It's high conviction, but totally open to hearing feedback and totally open to being able to grow with that feedback. I think that's such an important quality.
There was a founder I worked with, and the VC said, well, I kind of think you should be doing more like this than like that with your product. And if you haven't tried that, I don't know why you wouldn't. And the founder agreed on the spot, came back to the investor 2 days later with that new feature live. The VC invested in that round, led the round with a term sheet because what they saw was,
Yeah.
wow, here's somebody who listens, takes feedback, and that openness means we're going to work really well together. And it would be great to have you kind of introduce yourself the way you would introduce yourself if you walked into a VC meeting to raise money today. How would you
Yeah.
tell them who you are and how you got here?
I am a three-time founder. I started and built two companies that got acquired. It took me about, 8, 10 years on each one of them successively. I have been, angel investing for a long time and decided to turn that into a full-blown fund. I absolutely love investing, but I love building even that much more. And I just can't imagine even living life without building. So I've got a fund, I hear about a pitch a day and write checks between $500,000 to $1 million. But really my full-time job and what I focus on is building super labs. And I'll share two key insights that I learned and then kind of what drove me to starting super labs. So the first thing is I'm fascinated by entrepreneurs in general, but not just tech entrepreneurs, people who are in Main Street America. And the first insight that I had was that if you go to Main Street America, it could be a storage company, it could be a distribution company, it could be a real estate company, and you say, hey, I've got a star team of 5 to 10 software engineers, and they can build all sorts of automations for you. What we've noticed is that many of those organizations don't know what to do. And you say, okay, well, then I'm going to go ahead and list out all the work that you're doing in here. How about then? And they still don't really know how to automate all that work. So here we are all talking about automation with AI. And the reality is that even with great resourcing, I don't think those companies are in a position to really get that automation. That's insight number one. Insight number two is that once you really detail the work and you understand the work that needs to be automated within an organization, the solution is not immediately obvious. And whereas a lot of people think that you just need to automate the current work the way that a human is doing it, actually the solution, the product solution may be quite different. With these two insights, we decided to charge at Main Street America and to be able to do one very clear thing, which is give you a human-like experience in training AI to be able to learn the work that you're doing. And so that's exactly the way that it functions. So you download on your computer and you start talking to it like as if it was an associate in your company, a junior person in your company. And you go in there and you basically share with them the work that you're doing. It could be everything from like, hey, I download invoices and I put them into Salesforce and then I put them into QuickBooks, all the way to here's what I do in HR, here's what I do in operations, any sort of work that you're doing. And you train it just like you would train another person in your company. It learns things and it talks to you and it asks you questions so that it really understands the work that you're doing. It's going to ask you for things that are really going to determine the edge cases and understand the intent behind the work that you're doing and get to some really clear answers. So the experience feels very human. The experience feels like you are training someone and that they're really understanding you, that they're really understanding the work that you're doing.
This is a big deal for small, medium businesses, for Main Street businesses that hear a lot about AI. There's no one solution that they can go to, right? Like you're making a solution available to millions of businesses that otherwise wouldn't know where to start.
So listen, I had this idea, I got really excited about it, and then I was telling a few friends about it, and I just got preempted. So we raised $8 million just a few months ago. And, I'll say I'm just incredibly grateful for the people that are believing in me and this idea, because that is, a large amount of capital. It really shows that this group of people believe. So I'm really honored.
And getting preempted is kind of the ultimate in terms of being a great fundraiser, where you don't even have to try that hard to do it, but it's probably because of a million things you did that set you up for that. How important is it for a CEO to be good at raising capital?
Oh, it's fundamental. I think if you can't get resources to pursue your idea, no matter how great your idea is or your execution, you can't move forward. You just have to be able to fundraise. The companies that I invest in, the number one criteria we have is that you're a presidential founder. And so we have this idea of a presidential founder that has all these characteristics, but one of the key ones is that your ability to fundraise. And the thing that's important to know in terms of fundraising when you're able to do that is that it's not just that you're able to get people to invest in you. It's a demonstration of how you're going to be able to run your business well, which is that you can communicate ideas clearly to recruit people, that you can communicate ideas clearly to your customers. This is just a fundamental trait that is necessary in terms of, being able to collect resources to pursue what you're doing.
Yeah. So I want to get to like how you got to that point of view. Was your first venture round for Shelf Engine?
Yes, first venture round was for Stefan.
What was it like when you were starting? Did fundraising come naturally to you? Were you presidential in those moments? And how did that evolve for you in that first round?
Yeah, I'll say, I was lucky that I had the experience of starting running and selling a company for about a decade beforehand. So I wasn't coming in totally novice, and I had, some of these basic characteristics that were necessary in the process. Shelf Engine is basically demand forecasting for grocery stores. So what we did was we forecasted how much a grocery store needed to order for a store. We had this really novel idea around it, which was that not only would we forecast how much you needed to order for your grocery store, which is a big job, there's 40,000 SKUs in your store, but we would guarantee the results. So for Shelf Engine, our first round was $800,000 on a $4 million cap. Now that I say that, it's funny, Super Labs is exactly 10x of that. Raised 8 million on 40 cap. Back then it was 800K on a 4 cap.
Yeah. How many folks did you have to talk to?
That one went fairly quickly. Honestly, I probably only talked to like 20-ish people. Gary Tan was just an incredible help on that front. So Gary introduced us to someone named Mike Miller, who's still a very good friend and investor in Super Labs now. And once, Gary and Mike and a couple other folks jumped in, then what we had was a lot of other people saying, oh, well, I'll basically invest in anything that Gary and Mike do. So that made the round go quite quickly.
Yeah, right. So getting that first anchor who has that belief and then becomes like an extension
Yeah.
of your investment sales force, right? That can be super powerful. Did you know that was going to happen? Was that luck? How did that come to
Oh,
be?
it's absolutely luck. I had no idea. Today, especially, there's so many seed funds and so many people talking up a big game. I had no idea, the position that Gary was in. Take Gary's first fund, which is a $7 million fund. He did 55x on that fund. So he's well known in the industry. And then, I didn't know that he was going to go on this trajectory to be the president of Y Combinator. Actually, it's a great story. When I got to pitch Gary, he invited me to his house on a Saturday morning, walked into his house, and he pointed at the baby monitor and he said, when the baby wakes up, your pitch is done. And so that was it. I just went for it, and I don't know, we chatted for about 20 minutes and then his baby woke up and he said, okay, let's do it. That's how that process went. But yeah, I had no idea. And I'm so grateful that, I got to be with such a great investor, because you can very much have the opposite.
Yeah, absolutely. And I think one of the insights that you're playing off of is that if you have the right kingpin, like I always think about the
Yeah,
bowling pins in the bowling alley,
totally.
and if you hit the king just right, it knocks down all the other pins. And that actually is one way to get a capital advantage. If you can have Sequoia invest in your company, capital for your next round is going to be a hell of a lot easier
Yep.
than if you have a VC who knows who's leading the round,
I
right?
completely agree. So this is one thing that's just so incredibly important, because as an investor, I will look at what your current cap table is today as a signal toward what kind of founder you are and what kind of company you have. And so there's some key things to do. Like, for example, I look for top tier seed funds with like really thoughtful investors to be, a great signal. So for our fund, for example, we don't do small checks. We only do concentrated checks. So a big portion of our fund is in your company, and that's a good signal. So if we invest, a bunch of people want to invest afterward because they know that we're doing a concentrated check.
Yeah. And if an entrepreneur doesn't have one of those big signalers that's already there,
Yeah.
what's for the entrepreneur to do about that?
Listen, it's really hard because they may not know the field. It's not their job to necessarily know the investor field. It's not their job to know that there's, this fund has this reputation, this other fund has that reputation. So the best that you can possibly do in there is talk to other founders, talk to other investors, and try to do your best on that front. But if you didn't necessarily do that, you don't have that advantage. But it's really important for your next round to be able to try to get that. Right? Your board starts getting built up with these investors, and you want to have a really great board, and that also matters to have those great investors. So if you don't have it yet, say, how can I get that in the next round?
Yep. Yeah, and prioritize those. And not all investors are created equal. So
Absolutely.
when it comes time to spend with them, you might be more willing to keep doing whatever it takes to get an investor who's going to change the trajectory for you.
Yep, absolutely.
Yeah, that round came together. You had the kingpin, it knocked down all the other pins. What about a round that was a lot harder? Like a round where you were really at the brink of things and it wasn't going well.
Yeah, listen, I mean, we almost died several times. The thing that a lot of founders don't know is that the rounds get substantially harder. And so, two things happen. One is that the number of investors that can do later stage goes down very quickly. And so I don't know what the exact numbers are, but I think it's like a magnitude of 10. So you have something like 10 times fewer people that can do a Series A than can do a seed round. So you have that. And then second, the expectations in terms of metrics, in terms of team, in terms of presentation are wildly higher. As they should be, right? You're basically taking a substantially higher amount of capital with a fund that does way fewer investments, right? So that is a really important part. So our Series A at Shelf Engine was really hard. I met with well over 40 Series A investors, all the top tier investors. And we had a business model that nobody was quite comfortable with yet. Even though, we had customers like Target, like Kroger, like Walmart, we were sharing a model that for people I think was like just too innovative to really understand.
VC investors and other investor classes, once they know an established pattern, it's easy for them to invest again in that. But if you're innovative on the business model, you might have a much better business model, but there will still be resistance and fear about it because it's not familiar, right?
Absolutely, absolutely. And I'm really glad that I persevered towards that and I didn't just say, oh, okay, I will just collapse to whatever business model is comfortable for you. This is where I think the founder conviction comes in, right? It's the ability to take the feedback and really hear what's happening, but also be really clear about my vision for Shelf Engine was to get to a place where we could just own the food supply chain. I thought, if we're doing such an amazing job, we can just own the food supply chain every step of the way and literally guarantee it all the way through. We're going to be able to eliminate an incredible amount of waste by doing this. And that was my conviction. And, all these investors, I think, said, that's really interesting, really like what you're doing, but it's just not exactly within this construct that we have. Well, I met Hans Tung, and Hans is a really famous investor. He's done everything from Peloton to TikTok. And he, said, wow, that's really innovative. It's a risk for us. But he's like, I think there's a chance this could be a very big business. In the meeting, he says, I don't really care if you're going to become a $1 billion company. I only really care if you're going to become a $30 billion company or more. And I think you have a chance for that. And so he invested.
Anything. Do you remember what you said or what you shared with him that got him over the hump, that got him interested and made him think it had the chance to be a $30 billion company?
Yeah. When we started the meeting, I remember this fairly well, there was a misconception in terms of how our business model worked. And it was one of these like awkward types of meetings where, everybody's starting to go on and you're realizing everybody's kind of talking past each other and not really quite clearly getting it. And I had to do this kind of full reset. And it's awkward when you talk to someone and that's like a great investor and has done really well, where you have to say something along the lines like, hey, this is going to be awkward, but I'm just going to pause and reset right now because there's a misunderstanding and here's what we're doing. And in that, Hans was like, oh, actually, that's actually really interesting. Because I think he was ready to kind of disengage until I did that. And it was kind of funny. I pitched him on a Friday. He got really excited about it. And he said, can we fly up this weekend and talk? And then they did. And then by Monday, we had a term sheet. And so even though we were really struggling, they moved very quickly on it.
Did it take a little courage to be able to say, hey, let me redirect this, let me reset this?
Absolutely. Yeah, yeah. And if you're not tapping into that courage tank at some point, then you're probably not trying hard enough in a meeting. But yeah, it absolutely took some courage on that front. And it could have been mildly embarrassing. Like if I tried to do the reset and somebody said something, I don't know, like what's the worst that could possibly happen? It's probably not going the right direction anyway. So
You're also showing like, hey, if there's something that's missing, here's how I'm going to handle that.
Yep.
If we're not seeing eye to eye on something, which is pretty interesting. It's a pretty interesting model. I wonder if it even takes your character up.
Yeah, that's actually a really interesting test. I should think about that for future founders, like how to tee something up where they have to do something that actually establishes a little bit of courage.
Everybody says in venture that they want contrarian. And yet when you bring contrarian in, if it's a square peg, they're going to say, well, I'm sorry, we only have round holes for you.
Yeah, I think what it's made me think of for future fundraisers is you always need to give some sort of analogy, some sort of anchor to the investor. So, I think the one thing that I really realized in that Series A is that everybody started thinking about our product as insurance and how could you underwrite certain things. And I didn't start the fundraise that way, but that's how it kind of got there. And so now, and YC actually does this really well. Like you see, like almost every company is they're like, hey, I'm like Airbnb for, pools, or I'm whatever. And so you have this like kind of way for people to, grasp these ideas really quickly in terms of an anchor. So I think that that's super important, but somehow your idea needs to be communicated in the easiest way, somebody to really kind of like remember that. And it doesn't necessarily mean that the pitch needs to be short. Sometimes people think that the pitch needs to be like, so say an elevator pitch, like, hey, you've got like 20 seconds to do it. Not necessarily. It just needs to be really memorable and really clear so that the other person grasps it quickly.
The expression I love is make it so simple, even a venture capitalist can understand.
Yeah,
All due respect.
exactly.
They've got to be able to repeat it to their partner, right?
Exactly.
And when you talk about Gary, for example, like, well, what's Gary going to say about the company that's going to have somebody else say, okay, I'm up for hearing about that.
Yep.
Like, that sounds interesting. And if you can't do that, it's a real impediment to that virality of getting investors on board and sharing it with their partners and feeling good about standing up in front of a committee.
Yeah. So listen, Ben, this is a really good point, because I think the dynamic that I didn't know when I was early in fundraising, and I didn't learn really until I was an investor, is that what happens is you go and do these pitches. If a partner is really interested and excited about what you're doing, what they have to do is they have to go advocate for you in this partnership group. And so you have to be able to communicate and then answer all these really difficult questions. And so my partner in the fund, for example, if I see a pitch, I go to Eric and I say, hey, I'm really excited about this pitch. One of the first things he's going to ask me is, okay, what are the competitors doing? Who are the competitors? What's happening? Why is this going to become a really large company? And if I'm not able to communicate those things, then it's probably going to fall flat. And it's not necessarily that Eric's going to say, no, let's not do it. It's more that the conversation is going to kind of peter out. And then I'm not going to have a clear answer for the founder. And it just doesn't give a clear, path forward. So as a founder, what I think about when I go talk to investors is, what can I give them so that when they go into the partnership group, everybody else is like, wow, I either want to learn more, or like it's an absolute yes, right? And if you're not doing that when you're coming in for the pitch, then what's likely happening is it's going to die in the partnership group.
And that is such a good point, because people end up feeling like, let me tell you more and more and more.
Yeah.
And what you're talking about is saying, hey, let me tell you clearly and simply. Well, let's talk about that. Like, how do you get a sense of what the investor is thinking? And when do you get your sense of whether an investor is a good match or a bad match? How do you read that room?
I think one of the things that's really important to do, and I do this before any pitch, and I highly recommend that anybody fundraising does this, is what are your fundamentals? Like what do you really care about? I don't care just about check size. Check size is important for my round and so forth. But like, what do you really care about? And the reality is that some of these funds are built very differently, right? So some of them don't really care about the outcome for the first round that they're in. It's all about subsequent rounds. Some of them, like ours, we put in a big check in the beginning and that's it. And so we really care about the idea being an absolute monster idea. And we're totally okay with you dying as long as you are pursuing a really big idea. So all these funds have these different constructs, and it's really important to ask right in the beginning, like, what do you care about? The other thing that I really like to ask a partner is like, how active are you? Are you writing a couple checks a month, or you're writing a couple checks a year? And that's very, different. Like, Fuse is the largest investor in Super Labs, and the key partner there does a couple investments a year. So I know that when he's evaluating it, that's a heck of an evaluation, because he's like, hey, I'm not really going to do that many other companies. And so this is really important to me. So that's a super important component in the whole thing. I really like to ask some point in the meeting what's landing for the investor and what they're thinking. The reason why is because you can very easily just talk the entire time, right? Like I always like dating analogies. You can just talk the entire time and not really see how the person across the table is really like perceiving things. And if there's known or unsaid that they're really trying to chew on, like for example, hey, I'm really interested, but I just don't know if the market's big enough. I want to know that really early on so that I can share with you how big the market is and how big the opportunity is. Hey, I'm really thinking this is interesting, but I think a vertical play is more important than a horizontal play. I want to know that early on because then I can tell you about how I'm seeing that, right? So that check-in is just fundamental. The number of times that I've sat down with some founders that just rattle on and all of a sudden our time's up and I have tons of questions, but I just couldn't get in there at any given point. That's a problem.
So is it a pitch or is it a conversation?
Yeah, it's absolutely a conversation. It's absolutely a conversation.
A lot of entrepreneurs feel like I'm supposed to go in and give my Shark Tank pitch.
Yeah.
You're not approaching it that way. You're doing discovery of what's interesting to the investor, what they're hitting, what they're missing. You're shifting that power dynamic too.
Yeah, this is something that I think is really important. I don't know if you're familiar with Chris Voss. Chris Voss wrote this book called "Never Split the Difference." He's got this piece in there that's so important, talking about tactical empathy, and you need to be able to walk in there and understand where is the investor coming from, what's happening for them, and if all you're doing is just like barfing a bunch of information at them, and it's not this kind of connection and conversation, yeah, it's such a lower chance of actually having a follow-on conversation. It's just so important to treat it as a relationship and treat it as a conversation.
How much of the talking are you doing in the meeting versus the investor when you get in that mode and you're turning it from a pitch into a conversation?
Yeah, ideally, if you're a founder, you want it to be 50-50. The trouble is that oftentimes it is something like 90-10, where you're coming in and as a founder, you're just talking the entire time. If you're not getting your investor to, dream with you and to engage with you on these questions, you're really missing out.
Yeah. And when the investor says, "Do you have any questions for me?" What do you think of the founder who says, "No, I'm good"?
Oh man, I even think about this in hiring. Whenever I have a candidate that I'm interviewing, and then I get to the end, I'm like, "Hey, I really want to have some time for you to ask me questions," and say, "No, I'm all good." That's such a bad sign. It's kind of like again doing the dating analogy. Like, "Hey, do you have any questions for me?" Nope, I'm good. I just told you all about myself. I don't care. The questions you ask are like really important here, and I think this is the thing. Is like as an investor, I would absolutely ask, like, hey, yeah, I want to understand, what do you think about my business right now? Like, how do you think about this? What do you think of our strategy? Like, you pattern match this to like some of the greatest companies of all time. Like, what do you think that they'd do right to get there? And use that resource. It'd be also a waste not to use that resource.
Yeah. Do you do anything to kind of test the character of VCs or of entrepreneurs when you're the investor? Like, who are they? Are they somebody I want to work with?
If I'm in person, I like this like one very important particular test. I like to sit down and they have no idea, but there's a couple of glasses of water on the table and they're empty. And there's a pitcher of water. I'm always really curious to see if they're going to pick up that pitcher and fill up my glass of water first. It's always such a tell. So I've got little things like that I like to do. But yeah, the character is fundamental. And sometimes I'll ask very specific questions on that. And I like to ask questions of like, oh, when did you do something that you think like really broke your values, where you're like, you didn't feel great about this? Like you talked about courage. I really like courage questions. And then sometimes I'm like, hey, can you choose to be really vulnerable right now? I want to hear a story of something that was really hard in your life.
Yeah.
And I think that's so fundamental because one, we're all just humans and we're working together and we really like to exchange in an authentic and vulnerable way. Second, such a core part of succeeding is getting through these really challenging times and as much of a window as I can get in on that about you. That's such an important part of it, right?
One of the things you and I have talked about before is that your bar for founders has gone way up because you've started to
Yeah.
get a sense of where there's a great match. How has that changed over time for you?
Well, it's changed dramatically because I've just seen so many more. Like, I see about 400 deals a quarter right now. And so that's just a lot of founders, right? And so I can see just so much more just because I've seen a ton. I think the other thing that I'm seeing is the founders that I have relationships with now, where I got to see them from the first pitch to seeing them grow to being able to have this relationship with them. I'm seeing these traits back to the things that have really worked, right? And it all comes back to that same presidential founder piece. It just matters so much to have some of these key components. I've just seen so many more deals and seen so many more people. It's such a core part to evaluating this.
Were you presidential when you first started? I gotta ask.
I mean, yes and no. I had a lot to learn, Sometimes founders, I think, start off a little too cocky. I think I started off a little bit of the opposite. I was a little too timid. I'm generally shy. I know it doesn't come off that way, but I'm absolutely like a little bit shy. I didn't know how to assert myself and communicate the conviction that I really want to communicate. So I absolutely have had work to do there, and I still do. I still love to get feedback on my pitches. Like, I haven't gotten this opportunity to do this with you, Ben, but I would love to do the pitch with you one of these days. And your feedback would be incredible. I would absolutely love to get that. Right? It's just a joy to be able to grow and learn like this.
Yeah. So, and again, back to the things that have been 100% common about the best fundraisers, they're like obsessed with getting that feedback. They are
Totally.
so open to it and seeking it, whether it's with granola or a friend or a venture investor who's adverse to the idea. They just want to know why. What can I learn from that? And how can I make the business better? How can I make the pitch better? How can I make myself better? To your point about kind of how you come across, there's a founder I'm working with right now where our little tongue-in-cheek joke was he was so easygoing and kind that you didn't get a sense of his genuine aggressiveness. And the way we put it was, hey, how do you be a little more American and a little less Canadian when you come across? But like it is helpful to have people see back to that seeking conflict piece too of like let them see what you're really like rather than being so polite all the time.
Yeah, absolutely. I couldn't agree more. But yeah, I was totally that, right? I was not being able to communicate some clear things that were important there. I had a VC, who's become a friend of mine now, but it was an investor. And he told me, he's like, you're just too damn nice. I actually found that really helpful.
So those moments matter, right? And I'm
Absolutely.
curious, is becoming great at raising capital something that's learned or is it something that's just innate, nature versus nurture?
No, it's absolutely learned. Yeah, it's absolutely learned. If I visited myself from, 10 plus years ago, it would be dramatically different than where I'm at today.
Is how do you feel like the industry has changed, especially with where we are in AI right now? How do you feel like the path to earn capital is different now?
It's very different. The first thing is that because of AI, we're witnessing old business models being destroyed. That means old constructs of how these successful businesses were, most notably SaaS businesses, is being really disrupted. Second, the speed at which new companies are growing is unprecedented. So it's not like we're just seeing like one or two doing this. We're seeing companies in YC, for example, that are getting to, you know, over 1 million ARR in less than 3 months, right? And that just wasn't the case 20 years ago. It just, I mean, here and there, but that was unusual. This is something that's happening at a very fast rate. When a founder pitches today, I think they need to be able to communicate that their business is going to be something that's really going to survive and thrive in 5 to 10 years and is not necessarily something that's going to get completely eaten up and taken over, which was not necessarily the case 10, 20 years ago when you had SaaS being a dominant model that you could say, okay, this is just something you can continue to grow and everything's going to be fine. You have to pressure test against some like really big questions. Like, for example, like, one question that's happening a ton now is like, what happens to your business in the case of super intelligence? Like, it's a super valid question, right? And that's not something that was asked of you 10 years ago.
Yeah. Well, I think about what you're doing with Super right now and how it fits into that. SMB focused businesses were hard to fund for venture for a long time because your cost of selling to an SMB was considered high. But now you've got agents who are doing outreach to, I'm sure, higher scales. How does that change the trajectory for a business like Super?
Yeah, it completely changes it because it's a market that you can go after that you weren't able to go after before. It also changes the expectations as being much higher because it used to be able to build a product before, as you probably remember, even just building a website was like really expensive and took a long time. Today, you can have a small team and produce an enormous amount, which is great. Expectations are much, much higher than they've ever been.
In 1999, when we started Blue Now, we had to build our own server room and stock it with Cisco gear, a firewall, and a load balancer, and some servers, all before we would deploy our first system, really. And it couldn't have changed
It's
more.
wild.
When you think about the founders that you mentor for this environment, man, it is so different. And standing out is so different. Is there one or two pieces of advice that you find are kind of the most helpful to founders to navigate this environment today and become great capital raisers?
I think that the good news is you have now way more feedback than you could have ever gotten just because you have AI. And so I would really work your pitch and really work what you have to present through AI, getting that pitch really nailed down. And then I think the other piece that I would do is I think before you even like kick off your fundraise, I would try to find a handful of investors, even for like fairly junior people, to say, hey, can I just try out my pitch with you? I just want to give it a shot. Like, are you open to that? I would do that, well before anything else.
I love using a hack I learned from Adam Grant, which is instead of asking, what do you think? You can say, hey, what do you think other people are going to think?
Mm,
Depending on the person and how close your relationship is, it can give them the freedom to give you more critical feedback.
absolutely. Absolutely. That's how they predicted elections, right? They've always said, who do you think others are going to vote for rather than yourself? Yeah.
Didn't know that. That's great. Yeah, it's an
Yeah.
interesting hack on the brain. If you boil down your advantage in raising capital that you've now built through a lot of learning and a lot of experience, what would you say makes you good at it? What's your one golden rule?
I start the pitch with helping the investor see how big this could be. And that's fundamental to what I think is why investors really want to invest, is because they can get an insane multiple on your company. And I want them from the first like minute or two of pitching to them being like, whoa, this could be a $30 billion company. Like this could be absolutely enormous, right? And I really want them to feel that and to see that. And so I focus on the first couple minutes of the pitch being there. And then I think everything else flows from there. And all these other components are really important. But if they believe early on in the pitch, then I think there's just a great opportunity there.
I think investment usually comes down to two things: size of prize and odds of success. If you don't
Yep,
hook them on size of prize, it doesn't matter what your odds of success are going to be. And the odds of success are going to take weeks to get through in most cases.
I absolutely agree.
Evan, this is awesome. I love talking with you. You've earned the success that you've had. So I really, really, really appreciate it.
Yeah, likewise, Ben. It's really a pleasure. You just have such a joie de vivre. You have such joy in your life, and it's always a pleasure to talk with you. And next time that we chat, I would like to get a lot from you because you have so many nuggets. So I will be eager to hear your perspectives because I really want to learn more from you.
That was such a rich conversation with Stefan. His view of fundraising is deeply internal, and he's not saying great fundraisers are the ones with the slickest decks or the best buzzwords or the most FOMO. Instead, he's saying that the people who are in capital are the ones who have built something inside themselves. And those people are able to hear hard feedback without getting defensive and act on it quickly. The idea is that it's presence, not polish, and it can all be learned. Stefan was super candid. He did not start out this way. He said he was too timid, too nice, too hesitant to really show conviction. And over time, through feedback and repetition and experience, he built that muscle. So if you're a founder listening to this, I think the takeaway is, instead of looking just at how do I pitch better, how do you start looking at who do I need to become so that my way of showing up earns trust, earns belief, and earns capital? It's a very powerful idea and a very hopeful idea. So a big thank you to Stefan for that. For more expert wisdom like this, please follow us on our Substack. And if you enjoyed this episode, please rate and review Razor's Edge on Spotify and Apple Podcasts. Thanks so much. See you next time.